Good morning, everyone. All right, so I say, things are kind of crazy lately, but it is what it is. And just looking at the S&Ps here. Well, they're starting to break out of this range that they've been in, whipping back and forth here for 4 days. And yeah, can they make all-time highs? Can they continue up? So on this chart, while this is aligned with that, I would just look at it as being irrelevant. And I would look at this from the perspective of this is what's relevant. And based on that, clearly, whether you ignore this or not, it's got to get through here to make a new all-time high. So looking at it from that perspective, I looked at any chart like this, I would believe it's going to make a new all-time high because of the power, the momentum move up, wide range bar, continuous up, no pivots here until it formed here, right? Um, and so it should be able to take this out and make a new all-time high. Should be able to. Now, this is a very shallow retracement, which could also say, okay, that's bullish because it didn't retrace that far. You had this crazy day of where things whipped around. Yesterday was a little crazy. Look at everything else and Apple and what it did and reversing a little later in the evening. But now that this is breaking out of here, it should be able to make a new all-time high. So, coming out of this little base, as I said, it should be able to come up here, and then we see how it reacts to it. And it's really just the bottom line. Uh, Qs here. I don't know about new all-time high, but similarly, I mean, this is terrible. This was, the AI day where things collapsed. So semiconductors don't look very good, but other things do. And if you've noticed, there's a lot of sort of accidents happening. Things that gapping down very severely, I guess on an earnings report, things that were doing well. But that is not unusual when the internals reach an extreme like they did here. And so you say, how could this continue to go up if the internals reach an extreme? Well, they do. They rarely turn on a dime, but they do warn us of long risk danger. Sentiment, it's interesting. Sentiment continues, right, to be on the positive side. And you say, well, shouldn't it be since, the move up and the way this is consolidating? Well, it stayed that way even with the gap down. It came off a little bit, but, basically they continue to buy calls. I don't know if I have the symbol in here. Here's yesterday, like 0.62, 0.69. That's low. So, on a day-to-day basis, there's still this call buying. So this strong belief that this market will continue to go up. And the Fed didn't do anything yesterday. And we'll get to the bond market. So we'll see. I see yields are up here a little bit, not a big deal, but you're going to want to keep an eye on that. So anyway, this looks like it should come up here. I mean, it's not inches, but not that many points away from filling the gap there and coming up into this resistance area. Really want to see these small caps break out. They didn't go down on that AI news as severely. It consolidated up here. We'll see if it can break out today. It's kind of a mess. We've been talking about loose and tight patterns in the green room and mentioned a little bit in MT Live this week. And this is loose. And what is loose? What loose means is indecision or uncertainty. Call it erratic price action. Um, Wide bars with tails and they overlap each other. And it just communicates, as I said, uncertainty. Breakout failures, breakdown failures. And so as it begins to tighten up, which might be what's happening here, maybe this is an inside day, maybe not. It's backing off a little bit. But if we were to get an inside day at this resistance, well, we'd set an alert above these highs and see if it could break out next week. So, we're still in a kind of a wait and see kind of situation as to, what's going to go on. Um, the Dow held up and it had that whip around. These are the futures, of course. But that, came back and it's tight, overlapping bars, but the bodies are small. And you can see it's, loose or erratic on the 65-minute. But here you got overlapping bodies and the range is contracting and it looks like it should be able to go up, maybe new all-time high. And so let's take a look at, just the industrials, not the futures. And here, you see the insanity yesterday. I don't know what caused that. I mean, it was the tariff thing. Um, yeah, Mexico and Canada, and then it, began to recover. And so everything began to recover. And pretty wild on the weekly chart here. That deep retracement and now another deep retracement back up again. So we've got these range expansions between pivots. Clearly, well, this isn't it could be marked as a pivot, but these lows must be equal. That's why the software didn't mark it as a pivot. So you got to bring a little common sense to what we're looking at and recognize, okay, yeah, you got two bars there, software doing what you told it to do, but it should be a pivot, or maybe if it, I'd have to look to see if it's even. I'm just remembering as I'm speaking is that this software won't mark a pivot until the third bar is complete and then the new bar starts. Whereas the other one that we use for scanning, it'll automatically mark it on the completion of the bar. This one has to start a new bar, and this bar is not complete. It won't be complete until today at 4 o'clock. Right? So then on Monday, if these two lows are different, even by 1 point, it'll mark it as a pivot. All right. So the kind of patterns that we're dealing with here, I mean, it just communicates a lot of uncertainty, about different things. What are those different things? Well, just go look in the news. President, tariffs, so on and so forth. As technical traders, we just look at this and recognize, if we would, sitting in a cave without any news, we would recognize and say, hey, those people are crazy out there, but here's support. They bought there. Here's resistance. Let's see what they're going to do. If it would tighten up at resistance, possibly, that could be a new long trade. But if it breaks out here and collapses again, the insanity continues. And we can see intraday, things are pretty crazy. Anyway, we recognize what it is. We adjust our biases and whatever, we're going to trade accordingly. Okay. Gold. I don't know. Those of you in the green room, Dan's friend gave us some information about some things going on in the gold market. Dan, did he ever send you those videos or print whatever he was going to send? I'm interested to see that. He talked about possibly an exchange defaulting because they can't fulfill orders, and it's got to do with this gold breaking out to a new all-time high. But clearly, gold's going up, and silver. Well, that looks like it's going to be possibly a catch-up trade. That's not moving too much. Crude oil trying to make the turn down here. Chevron was down on earnings this morning a bit, so we'll see if it can actually make a turn here. It's on this pivot and the rising 50, so clearly there's some buying going on. We'll see what's going to happen there. Bitcoin just consolidating at the highs, just more choppy price action. And as far as here, bonds, waiting. We're waiting. And I think this is what many are waiting for, to see if interest rates, these are bond prices, of course, but if bonds break out above this area and they're still not moving, interest rates go down. And that's an inverse relationship. Bond prices go up, interest rates go down, and vice versa. Head and shoulders bottom suggests they're going to go up. It's a weekly chart on this major support area. It's overall, just wild kind of price action there. You know, up all the way down, try and go back up again. Monthly chart looks like possibly forming a bottom after declining, for quite a while. Looking for some confirmation. Right. And here's interest rates. Which way are they going to go? So I draw the two lines here. They're on this support. And yeah, which way are they going to go? And still indecision as we look around. All right, spiders moving up into the gap fill area, filling that gap there and backing off this morning. This is a bad tick. Someone always asks, why is that crazy line there? It's just bad data. Anyway, this was into that area of resistance. And for the moment, it's coming down a little hard for whatever reason. But look, go back to the charts. Consolidation, indecision, it's moving up, next resistance area. If it chops around sideways here for a few hours, maybe it could break out to that new all-time high. We'll see. I tend to think it's going to consolidate here now that the news is out. And, the 8:30 news is out. I'm just looking at anything else is coming out after that. Where? Hold on a sec. No, it was all the PCE data at 8:30. The Chicago PMI at 9:45. So in a half hour. So we'll see if that has any effect. It possibly could. And well, here's something that, less indecisive. Transports gap down under this consolidation. That's not a good sign, and I've seen markets go up. If you go back and if you're around in 1999 into 2000, after 2000, I mean, the transports were lagging. They were starting to go down. Markets continued to go up. And it was like, here's these negative signs. But, eventually things deteriorated, as you should know. So while this is one shot across the bow, it doesn't mean the markets can't go up. All right. So we see where spiders are, backing off a little bit here. We'll see if they hold on this support as they come down into what was resistance becomes support. We'll see. Probably just looking at the 5-minute, they shouldn't even get all the way down there. And then SPX, let's just see where things are at here. I'm sure they moved a lot. All right, they're up in here. There's a crazy price action from yesterday. And nothing was touched yesterday. It's just typically the case. Mm-hmm. It gets touched, it'll be pain. 610. It come up a lot. Zero. So remember, prices are up here. We look at what's in between the strike and what I call lines of defense and the strike, because if it goes down there, it's going to be painful. So it's up here. You would have to go through all of this congestion and yesterday's low. So unlikely to happen. That's all the credit spread is something unlikely to go to a certain area within a certain amount of time. It's the most simple trade there is, but when they don't work, quite unpleasant. So you got to manage them like a nervous trader. Not really, I'm just saying it that way because it's not a directional trade where you just, hey, you know what, you can put in your stop, or you can put in your conditional stop, but if you let it go down to where your technical stop would be based on a directional trade, and you hit a potentially a full loss, you'll be screwed. And so those of you that are on the weekly options trader or not, well, not, if you are, just watching Dan manage these things is fantastic because he's been doing it forever, and it's how it needs to be managed as a credit spread trader. So if you're considering signing up for that, there's a tremendous amount of education, and his batting average is awesome. All right, so new all-time highs today? I think not, but hey, you never know. So there you have it. All yours, Dan.
Good morning. Happy Zero DTE Day. You know, two amazing things to me. The Fed non-event. That was, I mean, everyone knew it was going to be a non-event, but you never know about the comments of hawkish or dovish if they'll throw a wrench in people's beliefs. But that coupled with this morning non-event of the PCE. But you know, I don't know if it was like, I forget what Rick Santelli said, the same as expected. Well, I heard him say it's the same as a year ago. So inflation is still high. You know, they can talk all they want about it coming down, but it's coming down. It's like, you know, you silly analogy. I'm punching you in the head, you know, 30 times a minute, and now I'm only punching you in the head 25 times a minute. It's still pain, it's still inflation. So, all right, alarms. We started, yeah, as Greg said, we started nibbling. We scanned a bunch of gold stocks yesterday. We actually have a put spread on SIL that we, you know, we're chartists, right? So today's Friday. So Wednesday, it was not a directional, but we sold a beautiful, as Greg explained, put spread. When we had that bar, I say I don't think it's going to 32 by expiration, and we keep the premium. And then yesterday we started looking for directionals. We did HL. And this one we just did a third lot, so we had plenty of ammunition left. I've posted any M bottoming pattern, big old void. It did not trigger yesterday. My alarm went off. Let me reset it now. 43.53. And we're going to buy call options on this if you're an options trader. That looks great. And let's just, I have a BNVX alarm. I actually have a put spread on this, the tens. It's going fine. Let's go right to earnings. And there's a ton of them. So I went through here already and deleted a bunch. Oh, Greg, our Roku. Remember we were talking about a core. I did not trigger it yesterday, but my up alarm went off again on Roku. Gotta keep an eye on that. All right, earnings now. Intel. I shorted the $18 puts as an earnings trade. So even, you know, it's up only 20 cents, but I should get amazing vol crush. And I think this is worth a 30-minute high directional. So that's, you know, I'll point out the tier ones here that I want to watch this morning. So that's one. That's a tier one. Apple, I wish for a call spread, I wish it was capping over 250. Still, it's up a lot from 220. So 30-minute low, I would say call spread, but not tier one. BKR, buy setup, reversal and support. I said yesterday, if it opened flat, buy the high. But now the gap's too big. Visa, what did I say yesterday, Don? I said, I hope it gaps over 350 or higher, 30-minute low call spread. So, when you do gap and craps, bigger the gap, the better. But, 15 is still bullish, actually. That's why just a vanilla rule, I say 30-minute low. Because if, we'll have 30 minutes of data of supply and demand of profit taking, new shorts, new longs, and then we'll decide. Core, no pattern, EPAM. It's bullish daily, weekly, monthly. So ideally, it just chops around for a couple more days. So there's nothing to do on this today. But it's starting to build a little bull rectangle after breakout. So that still looks great. Deck is getting killed. So it fits in the category of very bearish gap. But is it excessive to give us a 0 DTE trade? Maybe. 30-minute high. We could do the 190s or below. Whiskey Yankee, no pattern. PPG, call spread. 118, call spread, and maybe a condor. Because we get resistance above, support below. But that's a perfect condor. As long as at the open, it doesn't go, crazy up or down. RMD gapping down, no interest, M&M. All right, so this one, when I saw it gapping here to 95, that is a perfect gap breakout to buy a 5-minute high. But now it's up 3 more outs. So it messed me up. So it's not tier 1 anymore, it's tier 2. This one I said yesterday, kind of a sloppy bull flag, but it's gapping down 103.50. Another condor set up right there. That's a railroad. So that gapping down, it's just one stock, of course. But we'll see what that does to the transports. This breakout, put spread, breakout, 30-minute high, put spread under here if it opens flat. I don't see any prints. La Playa, excessive gap. I don't see any prints, but it shows it up 17. Look at this amazing consolidation. Flat 20 into the 50 all-time highs, but the gap's too big. HIG, I see one print down here. If it were to open flat, if this is a bad tick, over these highs I like. If it gaps down, then a call spread. Gas boot 163, call spread. PMT. Ideally, it opens flat and then 30-minute high. Sky West. Look at that gap to all-time highs. That's an igniting gap. And this consolidation. But it's up a lot. It's up $7. So I'm not chasing. Here's another one. If it opens flat, yesterday's high. ABCB. I'm putting all these in my other computer. PFSI gap into 119. Done. 30-minute low. 30-minute low. 0 DTE call spread. Or Beazer. Is weaker than the other housing stocks. That's a nasty gap, but no pattern. These are morning earnings. XOM, no pattern. This was a nice bottoming pattern, and hypothetically, if to open at 178-ish. I'd be all over that, 5, 10, 15, 30-minute high, but now the gap's too big. Chevron, I said yesterday, you know, buy setups after Climos are not high odds, and they often set up measured move lower. So under Wednesday's low, call spread. AON put spread, 375, sloppy, but put spread idea. Charlie Lima for a big old safety stop. That's a nasty gap. Look at that gap. But I got no bias. This gapping down, call spread. Golf whiskey, maybe Condor again. I think he's traditionally very spready though. Ba, I don't see any prints. Well, yeah, I did. 123. That's a nasty gap down, but no bias. Reviti, if we can get a 1, 2, 3-ish thing, but it's at this prior high. So man, never mind. Then sloppy, but put spread. Well, no, take that back. Gap's too big. RBC. And buy setup. You know, near the prior highs though. ALV. Gapping down, call spread. JHG is another beautiful breakout trade. JHG, I don't see any volume, but if it is not an excessive gap, then you can buy yesterday's high and start off day trade, put spread. Whiskey Tango, slopping all over, no interest. And that's good. I got through all earnings. Well, the ones that I didn't delete already. Miscellaneous stuff, IFF, nice bottoming pattern. Look, see how the 20, if I were to take all the data off, it's exactly what I would say. It's a bottoming pattern and a long-term uptrend. Now put the candles back on, and there you have it. You got a bottoming pattern, 30-minute high. Schwab continuation breakout, but it's, you know, 100% rate. Hey, Sam, this is another example of bullish price action at resistance. 100% retracement, so we would never, ever dream. We would never dream of buying like a 1, 2, 3, for example. But now it's been going sideways for 2 weeks. ABCB alarm just went off. Wix alarm went off. And it's again bullish, 100% retracement, bullish action. This would be a great 30-minute high idea. Let me reset my alarm over the high. Wix. I'll set it at just eyeballing 246.20. Ideally, it slops around and we do 30-minute high. NEM alarm. Let's wait 5-minute high to buy those calls. Intel slopping around. Let me check my short puts. So like, but it's still okay, 30-minute high, as long as it doesn't get destroyed here. Oh, I got a very nice gain on my puts. All right, yeah, I'm gonna close them. Use ripping. I'm out of my Intel puts. Very good. This M&M bottom right, gap's too big, so forget about it now. Forget about it, as they say in New York. V Victor, that's still 30-minute low. Here, I'm just gonna check the juice bar, just to check things out. How far we can get away. So let me check the 355s are only 25 cents. The three